Hey, welcome back to the See Today Business. It's Wednesday, so it's time for our business talk. We are now joined with the personal finance enthusiast, Dani Rachmat, here to the studio to talk about the 100H stock investment rules. So, explain to me a little bit about the stock investment portion, 100H rules. What is this?
Actually, this is the part of the portfolio management.
Okay.
How someone should invest, how much they should set aside for stocks, and how much they should set aside for other assets.
Okay.
So the general rule is that 100 minus H, minus
100
your H.
minus
Yes.
H. We're gonna talk.
This should be invested in the stock market.
Oh, so 100 minus H rules, we're gonna invest it in the stock market.
Yes.
We're gonna get in more details on that one. So percentage, 100 current H. Now the choice ultimately hinge on an individual risk tolerance. So again, this is for people who already start investing and then like how much you want to allocate on those kind of investment. All right.
Even before you start to invest,
You need to.
it will be better to know that
Okay.
rule. 100
Right.
minus your age, you should invest in stock market.
All right. So now stock continues to stand out as a premier investment choice. And is this always the case? I mean, especially right now, you know, with the rates going up to 6% currently, people talking about. I saw you mentioning on your social account talking about investing in bonds, but like, is stocks should be your primary?
Yes. Why? Stocks would be the primary choice of everyone that investing, because our economy will grow with us. Will continue to be there. Will always be there, despite the economy, despite the condition. Yes, at some point it will go down, but eventually it will continue to do their business and continue to grow.
All right. So one of the things. Putting your investment a lot in stocks will also help on the investing in stocks is a vital component as asset growth. And I'll explain to us.
Yeah, because like when we buy our clothes and then our foods, we buy those products from the companies listed in the stock market, right?
All right.
So when we consume that goods, we contribute to that company's profit, and that company profit will make the company grow even further.
All right. Now, same I can say about the APBN and the bonds, because you know I'm gonna use the facility. We all gonna enjoy the facility at home. But let's go with the 100 rules. We're gonna focus on this one for right now. So 100 minus your age equals to investment allocation. I love in stocks. So I love how you brought this up today, because I just turned 40. So we're gonna look at the 40 numbers right there. Give me a second, right there. All right, so on this calculation for you at home, we're gonna share this eventually on our social media. So 100 minus age. So let's say you're 30 or 40 or you're 50. So right now I just turned 40. So I want to focus on these numbers right here. So I'm 40 years old. So 100 of my number age minus 40, so we're talking about 60. Now what?
60%.
60, so we're talking about 60%. So what should me or people at home, what should we consider what should we do with 60%?
What we have to understand is that 60% is our asset allocation, not our salary allocation.
Oh, okay.
If I may?
Yes, please.
We always start with this budgeting, right? This one is 20% for investment.
Yes.
And then this 30% is for debt or self-reward here. And then this is living costs.
Yes.
So that 60% should be here. So 20% of the salary that we invest should be 60% in stocks.
Okay.
Instead of 100% of our salary, 60% in stocks. That will be very dangerous.
Okay, so from the 20%, we're gonna take 60%.
60%
to actually stocks. Okay, now there's another number, 40%. Let me ask you, how do we get? Is the 40% is just pretty much 100 minus 60 is equals to 40%. So what's gonna be the rest for the 40%?
The rest 40% depends on how you look at the economy.
Okay.
For me, I would rather put that 40% in the government bonds.
Okay.
Why? Because government bonds give me the security and also the assurance that I will get fixed income every 6 months if I buy the fixed rate in the secondary market. If I buy in the primary market for the retail bonds, I will get a monthly income for this one. so that regular income I can add up to this one, but I still have the comfortable 40% of my asset.
All right, so this is when, mind you, when we're talking about 60%, so we're talking about 60% that you invest monthly.
Yes.
You wanna put this. It's not a one-time buy. Well, if you can do it, but most of us who
Yeah.
invest, we usually do it this monthly. From especially if you do at home have salary like I do every month, and if you invest 20%,
Yes.
then the 60%. For me, is 60% is gonna go to stocks, and then the 40% is gonna go to either government bonds. Some people put it on gold. If you're for gold, again, I'm gonna ask you this again. Property, should we consider property as an investment?
If you have the money, then go for it,
Okay.
because property requires bigger capital
Okay.
in the beginning. But then if you really know how to play in the property market, and then you know which property that you should buy, and then you can get the regular income from that, then go for it.
Okay, so when we're talking about 60 and 40%, is how much money we put in on
Yes.
that one. It's not the value of, because honestly, my property is still value more than my
Yes.
stocks. That is,
Yes.
it costs a lot of money to buy a house, actually. So again, this is for 30, 40. If you're still in your 20s, you're still early on. You still have a lot of times. Again, so if we're talking about somebody in their 20s, so they need to put 80%.
80% of their investment in stocks, yes.
80%. You're not even
Because-
make it lower.
Yeah, because with the younger age, they have more time to wait on their asset to grow,
Yes.
so something happen.
Right.
So that why when you are very young, you keep your money in something that is very safe and not grow so much.
Okay.
Because you want to build the asset, right?
Yes. So
Then this 100 minus age is when people were the life expectancy is still at 60 or maybe 65. Now with older and then longer life expectancy,
yes.
this can be like 110.
Oh, sorry.
Sorry,
Go ahead.
easily 110
Okay.
or maybe 120 minus your age.
Okay.
So if you're 40 now, 120 minus your age is 80% of your investments will be in stocks.
Ooh, okay. So again, the reason why the younger you can invest more on stocks, again, pick your stocks. Know if you need help, find a financial advisors. But at the same time, with the stocks, there's a chance if it's gonna go down right now, it will rebound
Yeah.
back, especially right now. What we call a discount. Like if you want to buy now
discount.
today,
Yeah, like nowadays.
All right, so investing sharing, we have the whole table right now.
Yeah.
Money market, bonds, and stocks. Can you explain this to us? Let me get.
Why I put this money market? Because sometimes people still want to be able to access their funds immediately.
Okay,
So
right.
this money market provides stability that bonds cannot. Why
Yeah.
bonds cannot provide stability like money market? Because when you invest in bonds, when interest rate goes up like just happened a few days ago,
yes.
the bond market will go down. You will get discount there.
Discount.
Yes, but then in money market, relatively more stable. But me myself, for my investment, I don't use money market. I just use stocks and bonds.
Okay.
Why? Because money market I only use for my emergency fund.
Ah, interesting.
Yeah.
Okay, so again, it's kind of interesting. At the age of 40, for money market, you put it up to 15%. Why the sudden jump from 10 to 15% right here?
Because when you're still younger here, maybe your what daily needs is not that much.
Okay.
Now in 40, 45, you already have kids in school and everything. Just in case that you run out of money, you can just
Take
get
it
this
from the money
from the money
market.
market that you set aside.
Okay, so and then the bonds again is whatever
Yeah.
from the 60, you divide it to that one. If you actually want to put the whole 40% on this one, like we mentioned earlier,
They'll just still be
then
fine.
we should
Yeah.
do that. All right.
Because you will still get regular income from bonds anyway.
Right.
So that-
There's that voucher like every
Yeah.
month or every year that you can, and then explain to us a little bit why is a good time? Why is it a good time to buy bonds right now?
Bonds and stocks.
Bonds and
because
stocks.
because
Oh, yeah, bonds and
interest,
stocks, that's right, yes.
interest rate is just went up, and whenever interest rate went up, the bond market the bond prices will go down. Why? Because people will tend to keep their money in banks instead of buying bonds with longer tenor. So that is why bond price are discount whenever the interest rate went up. Also happened in stock markets because with the high interest rate, people tend to worry about the stocks because they have, for the companies with that, they tend to pay more for their debt to the banks. Interest-bearing debt will make their expenses in interest expenses higher. So that is why stock also discount
Right.
in this kind of condition.
That's right. Now, that's interesting. I remember you mentioned, I saw your live on Instagram. Mas Dani mentioned, like, it's a good, when people are selling because all the stocks are going down right now, it's for us investors, this is time for us to buy. So if you were looking for something to invest, something interesting, I still remember, like, in the 2020 when COVID was happening,
Yes, when COVID was
everybody was like
happening, yeah.
worrying and selling, but at the same time, you know, it's a good time. If you, again, be mindful, as we mentioned earlier, you should spend at least 20% of your money for investment.
Yeah.
And then again,
And the basic principle of investment is that you should buy low and then sell high.
Yes.
Don't stop.
So right now, it's low time. Or what we call a discount. Let's say if you go to the mall and you see something on discount, it's moment right now. All right. So with that, please be mindful. This is only advice. We're not telling you what to buy or what to invest on. But again, if you need help, please go to your financial advisors. If you want to follow Mas Dani Rachmat, available on his Instagram, he will be open to suggest any help that you need. We'll have more updates from around the world when we come back here on See Today. Stay here with us.
Thanks.